My opinion on this is they actually know what they're doing. They know they're debasing the currency and they've all kind of agreed it. We all say the central bankers are dumb. I'm not sure that's true. I think they know exactly what's going on.
If you think about what the problem is for the banking system is, okay, we know all this inflation is coming. We know that we're going to be forced to buy these bonds, and we know that's going to ding our profitability. But there's this escape raft, and called crypto. And if people really latch onto this and they say, hey, why do I have these dollars, euros, yen, yuan, whatever? Let me go buy an asset that's outside of this whole system, and then I'll just sit back and watch the fireworks. That's not good for the banks.
Recently, the European Central Bank claimed that Bitcoin has failed as a global decentralized currency. This assertion, while baseless, reveals a trend among central bankers, a refusal to acknowledge the adoption of cryptocurrency. But despite regulatory efforts, cryptocurrencies like Bitcoin continue to thrive. In a recent podcast, Raoul and Arthur Hayes discuss the ongoing issue of currency debasement and its implications for cryptocurrency adoption. They suggest that central bankers are not ignorant of what is happening. Instead, they are well aware of the currency devaluation and have allowed it to happen. Keeping this in mind, Powell and Hayes believe that cryptocurrencies like Bitcoin offer a potential escape from the flaws of traditional financial systems, but also note challenges such as regulatory hurdles. Let us now view clips from their discussion. As we do, please give this video a like, subscribe to the channel, and turn on post notifications for more similar content. Make sure to stay through the end of the video, as they reveal why governments willingly keep cryptocurrencies within their existing financial system rather than banning them outright. Thanks, and enjoy.
My opinion on this is they actually know what they're doing. They know they're debasing the currency and they've all kind of agreed it. It seems, how do you think through that? Because we all say the central bankers are dumb. I'm not sure that's true. I think they know exactly what's going on.
I don't think they're dumb, and I think more so the politicians, right? If I'm a politician in any system and I have the ability to print money, what do? I give away free shit to people for their support, whether it's a one man one vote democratic system or it's some sort of like fascist communist system. It doesn't really matter. At the end of the day, the people in charge promise the majority of the people who aren't that wealthy, like, hey, I'm going to do something for you. Now, they don't tell them I'm just going to print money and debase your currency to pay for it. But again, it's all the same game. There's nobody in the world, however many elections are happening this year, except for maybe Argentina, which are like, hey, we've spent too much. We need to cut back on government services. We shouldn't be doing all these things. We're going to balance the budget. It's going to be tough, but we take our knocks now and the future is bright. No one's campaigning on that anywhere in the world. And so if that's not going to happen, then why would you stop?
Yeah, my view on that is they don't want to blow up the baby boomer complex. The great baby boomer complex is where all the savings are. They are baby boomers themselves. They don't want the equity market to go down because that's the collateral of the system. So they protect that lot and sacrifice everybody else in the entire system. Because a retiree, it's fine. You debase the currency, your equity, your share portfolio goes up. You've got higher interest payments right now. They're all fine. Everyone else is totally screwed in this.
Yeah, but again, thankfully we have crypto, so there is a way out.
So let's talk about that. So this crypto life raft, the regulators are kind of struggling still with letting it happen. They want to throttle it. How are you seeing the big picture play out of the regulation, the adoption, and how governments allow it to happen and that kind of phasing?
So there was a paper written by this guy at Columbia, Colomaris, I can't pronounce his name. And it was about fiscal dominance. Basically, the federal government has issued so much debt, the spending is so high versus the tax receipts that any sort of notion of independent central banking goes out the window, and the central bank becomes a tool of the federal government to pay the bills, right? And if you think about what the problem is for the banking system is, okay, we know all this inflation is coming. We know that we're going to be forced to buy these bonds, and we know that's going to ding our profitability. But there's this escape raft, and called crypto. And if people really latch onto this and they say, hey, why do I have these dollars, euros, yen, yuan, whatever? Let me go buy an asset that's outside of this whole system, and then I'll just sit back and watch the fireworks. That's not good for the banks. They're not going to make any money on that. So, what do they do starting in 2023? all of a sudden, the Winkle clowns, they try to get an ETF approved for 10 years. Did the Lord's work for 10 years trying to get this ETF approved in the US. Still don't have one, by the way. And Larry Fink, within 6 months, gets an ETF. And so TradFi says, okay, this crypto thing works. There's obviously this zeitgeist of too much federal spending. I mean, Jamie Dimon rages on about it every fucking quarterly report. Oh yeah, the US is spending too money. US is spending too much money. Well, instead of them getting fucked by them being forced to buy bonds that are negative real yielding, well, let's have a product that we can throw our clients into and make fees that's still within the system. And that's why I think these ETFs are now being embraced, which is, hey, here's this crypto derivative. You don't actually get to use Bitcoin because you can't withdraw it. You can't even redeem it. You want to redeem, you get dollars back in these ETFs, not Bitcoin. And so it's just a way to put all these people who want to get into this crypto life raft, but don't want to put in the real work and deal with private keys and, OPSEC and all the things. I mean, it's annoying, but again, freedom isn't free. And here's this ETF. You can subscribe to it through your retirement account, your pension fund. You can buy it on a stock exchange. You've got all these, respectable looking folks selling this to you now, saying this is a way to diversify against inflation. And the banking system reaps fees. And we've seen how successful it's become. So I think there's going to be a Bitcoin ETF, an Ethereum ETF, a Solana ETF. Regardless of what any politician says, the banks know this is their way to stave off the effects of being forced to buy these bonds that are bad deals for them.
Meanwhile, BlackRock CEO Larry Fink remains optimistic about the possibility of an Ether ETF, despite potential regulatory challenges. Fink's confidence stems from his belief that an Ether ETF could still be listed, even if the US Securities and Exchange Commission classifies Ethereum's Ether as a security. The SEC's scrutiny of Ether's classification has raised concerns in the market, but Fink's positive outlook suggests otherwise. With 8 potential issuers, including BlackRock, filing for a spot Ether ETF, anticipation builds for the SEC's decision expected in May. BlackRock's ongoing success with the iShares Bitcoin Fund proves its current dedication to the crypto sector, with Fink expressing bullish sentiment toward Bitcoin's long-term prospects. Now, let's resume the interview as Raoul Pal and Arthur Hayes delve deeper into the sentiment of governments and financial institutions towards Bitcoin and Bitcoin ETFs, discussing the potential implications for the market.
The government quite likes it because the money's actually not leaving the system. It's not you and I, opening, having our ledger and taking our money outside of the system, which is, why, when I saw the European mess back in 2012, that's what got me into Bitcoin, because I just wanted to be outside the system. But these people aren't, so they're just kind of renting the performance of it without leaving the system. And that's a nice way for the government to say, well, guys, you play in this, but it's going to stop them opening the Coinbase account, at least starting the journey.
It's better to do it this way than to ban something. Because when you ban something, then people are like, oh, well, why are you banning it? Maybe I want to have some of it. Look at the illegal narcotics trade around the world. You tell people they can't have some, they say, no, I'm going to have it. Why not just say, oh yeah, you want crypto? Oh, here's a BlackRock Fidelity, blah, 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 ETF. It's safe. It's custodied and your bank that you know and trust, blah, blah, blah. Come on in. So I think that is, for some people, their crypto thing. They want to take their fiat, trade crypto, and earn more fiat, which again is fine. It's a choice that people get to make. But if you want to take your fiat and save it in something that's outside of the system, then you have to go and buy physical Bitcoin and deal with what the issues that come with owning physical Bitcoin.
And for me, I know the government's probably thinking, great, we've got everybody contained. I actually think a bit reverse. It's a Trojan horse. Because once you start to learn about this space, as you go down a very, very deep and long rabbit hole and you realize why you're doing it. And before you know it, then the ETF doesn't make sense for you anymore because you want to diversify. So how my mental model for these ETFs is we got crypto land and fiat world. And this is just a trade deal between the two. So hot money flows. If you think of VC as FDI and you think of this as hot money flows, it's just a trade deal. For me, it's like this is as big a deal to me as China opening up after the WTO agreement, because we've got now a free trade agreement essentially between them. Well, relatively free.
Free is what the price impact is. Are people actually going to hold this stuff? If we'll markets down, 10-15% over the last 2 days. How is that going to affect the flows? How secular is this trend of cash coming into these ETFs? How much do people actually believe in this, negative correlation thing? And can they actually deal with the volatility? I don't know. We're going to find all this out about this new segment of the market and how they behave when they start seeing the real volatility that's been suppressed in TradFi for the last 40 years. So I think the jury is still out on how big the positive impact will be. I definitely believe that the banks love fees, and this is a fee bonanza. It's an opaque, illiquid market where the end customer, they don't care if they're paying a 2% spread if the thing goes up 30% in a quarter. They could give two fucks. But, the bank trading desk is loving it. BlackRock's just shilling them all sorts of stuff. So I think there'll be as many ETFs as they can get out in this market as quickly as possible just to ramp up AUM and get those fees.
Also, I think they're praying that they're not allowed to give ETH yield, because if they get the ETF out and they keep the yield themselves, that's a huge fucking bonanza. They will take it, any opportunity. I know Fidelity's just filed today for the ETH to offer the yields, staking yields, but let's see. My guess is the SEC says it's too complicated, and Larry and everybody else will start printing cash in this kind of stuff, and people will realize.
In other news, the ongoing discussions surrounding the long-term effects of ETFs on Bitcoin's supply and price have garnered significant attention from market observers. Recent reports suggest that a substantial squeeze in supply, where demand outpaces the available Bitcoin for sale, may emerge within the next 6 to 12 months. Notably, the buying force generated by ETF purchases has already surpassed the daily supply of newly mined Bitcoin. With the upcoming halving event set for mid-April, this dynamic is expected to further intensify. Following this halving event, where the Bitcoin supply will only increase by 3.125 BTC per newly mined block, market dynamics are poised for significant shifts. Charles Edwards, founder of Caprioli Investments, has emphasized the significance of this upcoming halving event, describing it as the most substantial in Bitcoin's history. Do you agree with the insights shared by Raoul Pal and Arthur Hayes? Feel free to drop your thoughts and analyses in the comments below. If you found today's video enlightening and want to stay ahead with more insights and updates on crypto and global finance, make sure to hit the like button, subscribe to our channel, and turn on post notifications. Your support greatly encourages us to continue providing in-depth content and discussions. Stay tuned for our next episode, where we'll uncover more about the fascinating developments in the cryptocurrency space. Until then, keep questioning, keep exploring, and most importantly, keep investing wisely. Thank you for watching, and we'll see you in the next video.